Hello and welcome. As per recent surveys, global inflation, trade uncertainty, labor gaps at large are clouding business outlook. We have seen India's retail inflation for the month of September also rising to a 9-month high of 5.49%. The impact of rising tomato, onion, and potato prices at large, food and beverage prices also rising to a 4-month high, and price volatility raising concerns. Essentially, the RBI governor also recently saying that look, significant risks persist as far as inflation is concerned. So, how is India going to contain the impact of inflation? And more importantly, are these concerns really clouding business outlook at large? Well, to decode all of this, I'm joined by Senior Economist Mitali Nikore. Thank you so much for your time, Mitali. First, do you believe these surveys suggesting, and not just for India, but for the rest of the world as well, that global inflation, trade uncertainty that we are witnessing at the moment, as well as labor gaps, are clouding business outlook?
So, Sakshi, let's break this down a little bit, right? What are we actually seeing when it comes to business outlook? What are some of the building blocks of business outlook? So, the first and most important building block of business outlook is really the situation that's happening across the world when it comes to some massive disturbances that are taking place to law and order and to peace, right? Because when we look at the situation in the Middle East and we look at the situation in Ukraine and Russia, which has been persisting far longer than anyone really imagined, these ongoing conflicts are definitely clouding business outlook over a longer term horizon. So that's the first thing. The second thing is this Middle East conflict then feeds into different expectations of inflation. So if we look at the performance of the US economy over the last, successive 9 or 10 quarters with, their monetary policy stance, they've managed to cut inflation and it's now at a comfortable 2.5% in the US. A number of other, European economies have also managed to tame inflation because even in the UK, food inflation was becoming a massive issue in terms of cost of living. And, they've taken the monetary measures required to tame inflation. Now when we come to, so these global sentiments of course feed into the business outlook, but for the US with the recent rate cuts, there's definitely a buoyancy in the economy and the jobs data has also been very positive. So there the global business outlook is set to be a little more positive. Now when we look at the Indian economy, we saw growth rate data coming out earlier this year. We both covered it and we saw it was one of the 15-month low on the growth rate outlook. Then we look at the inflation data that's come in this month and it's almost like a 9-month high at 5.4%, especially on retail inflation. So again, these two indices combined, it leads to the neutral monetary policy stance that RBI took. Why is that? Because RBI is now preparing that look, I need to also fight inflation and I need to look at jobs and growth rate and I have to balance that, you know. So that's where we really are. And I think the businesses are also realizing that some sort of monetary policy action will, come.
Right, but Mitali, looking at price volatility concerns really that one has seen in recent times, and like you said, how can India then contain the impact of inflation, especially ahead of the festive season?
Yes, exactly, Sakshi. So I think, what India can really do, and we have to look at two sets of measures. One is, monetary measures, and the other is long term investments in infrastructure to contain inflation. Because what is driving inflation? It's the three commodities, our top commodities, right? Tomato, onion, potato, which is driving inflation. And this is what hurts all of us. It hurts every time you go to the vegetable market to purchase, your regular supply of tomato, onion, potato. It's like, now what has happened to prices? So essentially, what we need to do is build better infrastructure, more cold storage, more cold trucks, what we call refrigerated trucks, reefer trucks. Invest in those so that the distribution of these commodities can be improved across the country because they are manufactured in specific states and we have to take them across the entire country to maintain that price stability. So there's a lot of investment required in infrastructure. And on the other side, in the shorter term, definitely, I think it's time for a monetary policy, measure. to sort of look at inflation, but not as much as we need measures to look at even the job growth. So somewhere we will see a cut in the in the interest rates, which can stoke inflation a little bit further. And for that, we have to be prepared on the retail side with better distribution networks.
Right. And, of course, reports suggesting inflation trends in India versus the rest of the world. How do they fare at the moment? And does consumer price index at large only tell part of the story then? Because, for viewers watching this, from your groceries that you go to buy to your renovation at home to a car you may be looking at, in the festive season, everything is at the moment looking costlier. I mean, across industries, across sectors. So for a viewer to say that, look, how is India's inflation trend faring in comparison to the rest of the world? And is this only part of the story then?
Yes, exactly, Sakshi. This is, of course, a major part of the story. The consumer price inflation is our key and leading indicator, when it comes to understanding the basic trends on inflation. But then there is also the wholesale price index. And the wholesale price index gives us a very good idea because that's really the trade that's happening business to business at the back end, which is like a leading indicator to the CPI. So the trend you're seeing in WPI today is what you will see in CPI 1 month later. So there is that indicator as well. And of course we should be looking at the jobs data, we should be looking at the data on interest rates, because that will also give us an idea of where is inflation actually heading. But the most important indicator is the fuel price index, because apart from the top commodities which make up 50% almost of the retail price inflation, fuel actually fuels a lot of the other inflation indices. So the fuel price is really dictating a lot of our price volatility as well.
All right. Thank you so much for sharing your thoughts. And of course, we will continue to track inflation as well as the state of the economy going forward.